Good morning and welcome to the VSA Morning Miner. It is Monday, the 3rd of July, joined by Paul Rankin. Andrew is down in Cornwall, so you've got us for most of the month. Paul, how are you doing today?
Pretty well, thank you. Pretty well. It seems like a very nice day outside too.
Yep, it certainly is. And although we're into July, there's actually a fair bit to cover this morning. So we'll start with news out over the weekend from Chinese EV manufacturer BYD.
Yes, that's right. BYD is headed for 3.5 million cars construction rate here targeted for this year, and they reported they built 253,000 cars in the month of June alone. And also Tesla had also commented not that many days ago that they had produced in recent days as well. Tesla had produced 400,000 cars in this latest quarter. So it just shows that how fast the automotive sector is now building vehicles that needs those batteries. Just keep in mind, for instance, that about 20,000 tons of lithium carbonate equivalent is needed for each 500,000 cars. So, needless to say, if BYD is going to grow at a 100% production rate on EVs, mines just aren't going to be able to keep up with this kind of a pace. So we can expect, I think, concentrate prices to be pressured to the upside for some time now.
All the downstream demand still coming through strongly for the long-term trend in battery materials. Sticking with battery materials, there's an announcement out from Savannah Resources this morning on upcoming milestones.
Yes, that's right. They gave us an announcement on what their milestones they'll be working to achieve here in coming months on their Portugal spodumene mine, Mina do Barossa, there in northern Portugal. And two of the main things they're going to try to get completed is the permitting for the power line extension up to the mine site. And the other thing is, since the community and the EIS statement had agreed a dedicated 17-kilometer haul road diversion to be built, that would be the other thing that they would want to get finalized as far as the right-of-way and the permission to build that road, since it's required, of course, to build the mine in order to have a road that the community will allow them to use. So those are the two key things I picked from that announcement.
Getting communities on side in Portugal and Spain is crucial to getting all your permitting. Announcement out from Sigma Rock this morning on concrete strategic partnership.
Yes, Sigma Rock is a London-listed European aggregates producer, and they've made a strategic partnership with Material Evolution, otherwise known as MEVO, an advanced materials company, making low-carbon cement out of industrial waste. And the process specifically, they didn't go into detail on, but they claim it's emission-free for ready mix and precast concrete. So it's definite. Sigma Rock moves an awful lot of aggregate for ready mix and concrete, though I'm not quite sure that it would be completely emission-free, as the press statement would say.
Okay. And then back into proper mining. Shanta Gold have come out with an announcement on their 5-year plan at Singida. What are the highlights there, Paul?
Yes, that's right. They gave 5-year production guidance both for the new Singida gold mine operation in Tanzania and then for the wider group and its contribution to their overall gold production for the 5-year period as well. They think that group production, as a result of Singida ramping up to full production, should bring the group production to over 100,000 ounces per annum next year, and it should stay there. Also, the Singida mine being open pit with relatively high grades should bring down the all-in sustaining costs for the group as well. For Singita itself, it should have a all-in sustaining cost below US $1,000 an ounce from 2025. The all-in sustaining cost this year for the group would be about 12 to 1300, so that's quite a good savings that Singita should be able to bring through to the bottom line for them. Singita output this year should be something shy of 26,000 ounces at a all-in sustaining cost of something over $1,300 an ounce. And the overall gold production this year, they expect will be probably a few thousand ounces shy of 100,000 ounces.
Yeah, I mean, looking at all of that and looking at what's happened to the share price in the last few weeks, obviously the gold price has come back from over $2,000, but only by $100 or so. Looking at those targets and where prices are at the moment, it looks like there's quite a lot of cash flow to be generated over the next few years, and really not very much priced into the shares at the moment. Obviously, there's execution risk to take account of, but plenty of upside if they do execute successfully.
And they had said at the proactive presentation that they gave early last week as well that they had one of their main institutional investors was a forced seller of shares, so that's really contributed to the weak share price of recent weeks.
Yeah. Okay. Unless there's anything else, Paul, we'll call it a day there.
Very good. We'll see you tomorrow.
Thanks very much.
Mm-hmm.